We all have our reasons for parking some cash, where you may be saving up for a down payment on a house, saving up for that world cruise on Royal Caribbean, or maybe you want some cash set aside so you can reinvest it back into the stock market when the prices are right. Whatever your reason, I'll be going over several different options for what you can do with your cash to earn the most from items like CDs, treasuries, brokerage cash accounts, and high-yield savings accounts. After I cover many of the available options and rates, I'll then go over some examples of who may be parking some cash and where they may want to put that money. And as a disclaimer, parking your cash isn't meant to make you rich. It's all about having a specific goal in mind for setting aside cash so you can leverage it later on. And depending on your goal, you should consider the following when you're parking your cash. First being access. What level of access do you need for your cash? Could there be an emergency where you need to pull out cash that same day, or can you wait a week? Next is rate. What is each cash vehicle giving you for a rate of return? If it has a higher rate, is there a trade-off? And next is penalties. If you don't meet the requirements or if you take your cash out early, are there any penalties that are going to cause you to lose any money? And the last one that many of you think of is service. What level of service do you need from where you park your cash? If you don't have much of a need for service, then you may be getting a higher rate. I'll start off with high-yield savings accounts, which provide a person with the easiest access to your money. Said another way, it gives you the highest level of liquidity. Plus, savings accounts are one of the few cash vehicles to insure your money. Currently, there are dozens of banks that are offering rates above 5%, and the concern that many people have with a high-yield bank account is the fact that once the Fed begins to drop the rates, then the high-yield savings account rates will also begin to drop. And that is completely true. But I don't believe that we're going to see a major... Here's a listing of banks and their rates during the filming of this video. And I do have a link to a spreadsheet in the description where I update the bank rates and their requirements every couple of weeks. It's free for everyone to use and you can check it out for updated rates. It doesn't matter when you see this video, you can always go and check out the spreadsheet. Now please keep in mind that banks with the highest rates are online-only banks, where some may have requirements like having a direct deposit or making a certain number of debit purchases per month to keep that rate. But there are also several that have little or no requirements and still offer great rates. But if you're someone that only trusts banks with physical branches in your town, here are some of those larger banks and their rates as well. Clearly, there's a big difference, where if you had $10,000 sitting with Ally or with Wells Fargo 𝐓𝐸 or even their Platinum account, at the end of the year, you make about $453 with Ally and only $1 with the Wells Fargo 𝐓𝐸 and $26 with their Platinum account. Granted, both of these Wells Fargo accounts requires you to meet several minimum requirements like having a certain account balance. And if you don't, then they're going to charge you a fee ranging from $5 to $25 each month. So if you had less than $10,000 in your Wells Fargo savings account and they charged you a fee for any of the months, you would technically be losing money in your savings account. In addition to banks offering high-yield savings accounts, many brokerage sites offer cash sweep accounts, where the cash not being invested may be swept into a money market fund, or they're going to be swept out to a partner bank that may offer insurance that could also go well above $250,000 if it's spread out across several banks. Here's a listing of several different brokerage cash accounts, what their fees may be, their insurance, along with the specific fund it may be swept to. This option also provides a high level of liquidity and near immediate access to move it from a cash state and directly to investments that you may want to make. Just a quick reminder that I'm going to be going over some examples at the end of this video where a person may want to use each of these different options for parking their cash. Now, to go a bit deeper into the money market fund, there are mutual funds or exchange traded funds that invest in highly liquid short-term securities like treasury bills and bonds. They are relatively safe investments that provide returns similar to what you'd see in high-yield savings accounts. But one potential downside is that some mutual funds have a high minimum of deposit to invest in the money market fund. Because these are bought and sold on an exchange, this is an ideal spot to have some of your cash parked on the side waiting for buy opportunities in the stock market. And like any investment, the money market funds do come with risk, and if a lot of people try to liquidate their fund at the same time as you, then the pricing could drop, or it could cause a delay in trying to cash it out. And here's a snapshot comparison of the high-yield savings account versus a money market fund as a quick reference. And if you're the type of person that's parking cash so you can leverage it for your investments, then you may be interested in today's sponsor, 𝐓𝐿, which aims to democratize private investing to give more of us a chance to invest in pre-IPO companies within the hottest sectors like AI, fintech, e-commerce, gaming, and blockchain infrastructure. This includes such companies as SnapLogic, H2O AI, and Astera Labs. This may range from up-and-coming semiconductor companies to companies that are leveraging AI to automate and integrate software solutions for other companies. 𝐓𝐿's platform provides the resources to research several different technology companies not listed on the exchange. And it gives its customers the freedom to select the companies that they want to invest in, which isn't always the case with some of those other investment firms. 𝐓𝐿 is already providing over 600,000 everyday investors access to private investing. And my viewers get a $500 discount on their first investment using the discount code on the screen. But this is a limited time promotion. Links are in the description below. Since some money market funds invest in treasury bills, I'll cover them next. Treasuries are essentially a loan that you are giving the US government, where they're going to pay you back interest on that loan. The upside is that the interest is not taxed at the state or the local level. Treasuries can be referred to as treasury bills, notes, and bonds, and the difference is mostly that they mature at different time periods. And the process to getting treasuries is via the Treasury Direct website, which is a government site, and they do sell them at specific intervals called auctions. I do cover the process in great detail in this video right over here if you want to learn more. There's also the option to buy 6-month treasuries on a site called public.com, or you can buy them from an exchange like Fidelity. And no, neither one of them is a sponsor, but it just works out well for the example. In each case, you know the exact rate that you're buying in at, and public.com also has a calculator to showcase how much more the Treasury gives you compared to a high-yield savings account due to the tax savings. The biggest downside with treasuries bought on Treasury Direct is that if you have any desire to sell them early, you're going to need to transfer them to an exchange in order to sell it. And then it's probably going to be associated with a fee, and then it's also going to take time to fill out the forms and actually make the transfer. But if you buy them on the exchange like Fidelity, you can sell them on the exchange's secondary market. Overall, yes, you do pay less taxes on treasuries, but it has one of the lowest liquidities of the group because of the friction in order to sell them early. The next options are CDs, or certificate of deposits. These are like locked-in loans that you give a bank for a fixed rate. They can be bought in 1 month, 6 month, 12 month intervals, all the way out to 10 years. The key difference with a CD versus a bank account is that the rate is locked in for the time frame up to maturity. The downside is that if you want to cash it out early, then you're going to be penalized and have to pay a fee. There are a lot of nuances and opportunities within CDs, and there's a lot of different types, but I'll refer to this video over here if you want to learn all about them. So for now, I'll list the top available CD rates that are available in the market during the filming of this video. They are still in the range of 4 to 5%, which is a solid offering. But you're going to need to balance out if it makes sense for your goal, your time frame, and whether or not you want your money to be insured or if you want to take it out early. Now I'll move on to some examples on how some people may want to park their cash. Let's say we have John and Becky that are saving up for a 9-month ultimate world cruise, like the one from Royal Caribbean that is getting all that wild coverage right now. They know it will cost $130,000 and they plan to sit on their money for 18 months until the final payment is due. They need to put a down payment today of $12,000, and then they have to pay the remainder 6 months before the ship disembarks. So they have 18 months to park $118,000. For obvious reasons, they don't trust having their money in stocks because of the potential loss. This money is going to be sitting outside of their emergency fund, and in order to lock in the best rates, they looked between the bank accounts, CDs, and treasuries, and they felt that the 18-month CD from Marcus at 5.25% was their best option. They chose not to use a high-yield savings account because they expect the rates to drop over the next 18 months, and they want to lock in the best rate that they can that's a guarantee. Now for the next scenario, let's say we have Jennifer, and she's an avid investor, and she wants to set aside her $50,000 inheritance until she believes the stock market is in a good spot to reinvest. She wants to have immediate access to her money to reinvest when the time comes, and she doesn't want there to be any penalties. She happens to have brokerage accounts with 𝐓𝐵L and E-Trade, so she puts $30,000 with 𝐓𝐵L for their 5% cash sweep that's insured, and $20,000 with E-Trade's money market fund sweep account. She put less in the money market fund because it isn't insured, and she felt a little bit better having it with the 𝐓𝐵L option. And I do have an affiliate link down below for 𝐓𝐵L where if you do open and fund an account, they will give you up to 37 free stock. It gives you some free money and it does help support the channel. Now we'll move on to the next scenario, where we have Ryan and Leslie that are saving up for a vacation to Europe in 4 months. They expect it to cost $8,000 for a 2-week vacation in Italy. They have $4,000 saved up, and they plan to save an additional $1,000 a month until they leave. Out of pure simplicity, they choose to have their money in a high-yield savings account at 5.32%. This gives them immediate access to their money when they need it, they know it's insured, and they believe it's the safest choice for their goal. They do know that they could go with short-term CDs or T-bills, but they don't want to deal with the extra hassle of having separate accounts, especially with the rates on the savings account being so high. Quick question for you. What are your reasons for parking some cash, and which option makes the most sense for you? I'd love to hear in the comments which strategy that you're personally using that meets all of your needs. Or I'd love to know if you're using a tool to park your cash that I didn't reference in the video. Whatever you're using, I'd love to know in the comments.